The goal of charting is to separate the signal from the noise. And my friends, all that noise out there is the confusion, is the fear, is the greed, is not being able to sort through what is actually going on. And the only thing that we are concerned about is to accurately chart price movement, to accurately predict where the market is going. Think about it. It's only going to go really one of two ways. It could go sideways, but typically, and we have seen that happening here with gold over the last 3 weeks, but usually it's doing like the S&P's been doing over the last several weeks. It's been going up, like the NASDAQ 100's been going up, like Bitcoin has been shooting up. But again, we are using two things primarily. That is the Heikin-Ashi candlestick, and we're using volume. If you can understand the interplay between those two, if you understand what the Heikin-Ashi candlestick actually is, what it shows you, and the interplay of that price movement with volume, which tells you what the buyers and sellers are thinking, if you study it, if you pay attention to it, if you learn it. I have two great trainings. I'm going to put them both at the end of today's video. One is on volume, the other is on Heikin-Ashi candlesticks. Would you spend just a few minutes this weekend, if you've already taken those trainings before, just one more time, listen to them. Take some notes, think about what we talk about there. It is just so critically important to helping you fully understand what it is we do here each and every day as we follow these markets. 10 to 15 minutes, that's all we ask. Let's jump into these charts. And guys, tell me what you think about the YouTube shorts that I am starting to upload. I'm going to try to upload 1 to 2 of those every day going forward. They're easy for me to do. I can do them in the Tesla as I'm moving around town or slowing down at the end of the day and share those with you. I'd like to know what your thoughts are. Okay, this is one of those Fridays where everything is up. Let's start first with the S&P 500. It ends the day up a little bit, the week overall up, reaching a higher high. But look at the volume. We don't have average volume. We didn't have it last week. We had it those 3 weeks prior, weeks 3, 4, 5, and 6 in the past. But we have not had it over the last couple of weeks. But nonetheless, market has still been going up, and hopefully it will continue to move up. You can see on the 2-day chart the stair steps as it just keeps going. But again, with the 2-day chart, we have to go all the way back to the 20th and the 21st of November, Wednesday and Thursday, in order, 2 weeks ago, I guess, in order to get a just average volume there. So again, things have slowed down volume-wise. Of course, the Trump effect going all the way back to the 6th of November where the market pounded up, and then Monday afternoon, the 11th of November, started moving down, dropped down, and then really took off again, moving up on the 21st of November, and only has slowed down a little bit on the 2-day chart for 2 or 3 half days. Not the 2-day chart, half-day chart for just 2 or 3 half days. So, again, no big volume to speak of on Friday, but again, looking for that Santa Claus rally maybe to help us push the market a little higher, but things are looking nice right now. Now we go to from the S&P 500 to the NASDAQ 100, and it moved more, 0.89%. Now again, there's a point there, so about 0.9%, so almost 1% up. Nice strong week. In fact, this week, as you can see, topped those interim highs from back on the weeks beginning the 4th and the 11th of November, because the prior 2 weeks to this week, we didn't get up that high. But well, look at this. We don't have average volume or higher. We're actually below average volume, but we did go higher to a high on the NASDAQ on QQQ of 526.72. Last week it was 511. The week before that it was 507 pretty much. And those two prior high weeks, 492 and 496. So we have continued to move up. 2-day nice move up. Did hit average volume on the last 2-day candle. and hit average volume in the afternoon on Friday. So again, got a little bit of go juice and rose up nicely. So let's look at where we are as we move into 20-year U.S. government bonds. We talked about how things switched over last week. They have moved to a higher high. Don't have any volume to back that up, but we do have price movement. Now, again, volume helps us see that there's more in control. And I tell you what, not going to get into volume in our weekly review. I want you to take that training at the end of today's video on both volume and Heikin-Ashi candlesticks, and you'll understand the psychology of what price movement is telling you when you put that volume metric in there. It's so important. Again, higher high on the 2-day, up in the morning, pulling back some in the afternoon with lower volume on bonds. And again, bonds just up 0.15%. So, but again, went up higher, but not a lot of volume to back that up. Some in the morning, and then, of course, pulling back, some nice volume in the morning, and then pulling back on Friday afternoon, just to give you up 0.15%. So not pretty much flat. Let's look at where we are with gold. Gold up 0.04, 0.04%. What has gold been doing the last 3 weeks? After that big down week on the week beginning the 11th of November, we had a doji the next week on the 18th of November, starting then the 25th. We had a red down candle this week. We've got sort of a doji, red spinning top, not any movement at all to speak of. And volume has been decreasing over the last 3 weeks. Below average these past 2 weeks. Look at the last, 8 days. Super low volume, just little green spinning, red spinning tops, almost dojis, as gold is just drifting. Where do I think it'll go? I'm guessing it's probably going to go down. Again, there could be something to trigger a market rally, and gold itself might swing up strong with the market, but I don't think so. But we're just letting it slide sideways until it tells us something that it's going to do. But all things being equal, the market tends to move in the direction of the largest chart, which is the weekly, which has all this down energy from the volume that we saw at the interim top. That was back on the week beginning the 28th of October, followed by our favorite signal for a crossover going down, a red spinning top with average or above average volume, which happened. Then we had that big down week, and now the sideways slide. I have a feeling it's going to slide maybe sideways a little more, but tending down. We shall see. Bitcoin ended the week up for the day, 2.58%. Higher high. Where did the market close? Let's look at 24-hour-a-day Bitcoin so you can see. Right now on the 24-hour-a-day Bitcoin chart, 100,000 and I think the $740 something right now on Bitcoin. We look at where we are, and you can see how similar the Bitcoin ETF chart is to 24-hour-a-day Bitcoin. And again, that's why we trade off the ETF. Why? Well, there's many reasons, but we trade off the ETF because it's an ETF. You don't have to put your money in some Bitcoin exchange anywhere. Again, you're dealing with a derivative. Yes, it's an ETF, but I like it because it's secured in an American market. And again, do what you want to do, but practice how you're going to play. If you're going to play on a Bitcoin exchange, then use this 24-hour-a-day Bitcoin chart from Bitstamp here at TradingView. If you think in the future, if you're going to trade Bitcoin at all, you're going to do it on something like an ETF, then try this one, HODL. Also, as you guys know who followed us for a while, I did really well on this little run-up here when Bitcoin ran down. I think this is the one that I traded and rode that up a little bit. I believe that's the one that I played BITI. It could have been further back, but I had a nice little success this year on BITI, which is the single inverse of Bitcoin. The other thing I liked about it too is that it was fairly liquid. 18 cents between. Again, it's a very low priced, but I remembered it being a little more liquid when I was trading it. So anyway, just gives you something else to mess around with if you're interested in inverse funds. And if Bitcoin starts a crashing, you can practice trade that, or you can even do yourself a little fractional trade, because BITI, hell, it's only 20-something dollars a share. You could buy yourself 4 shares, risk $100, and if you lose 10% or even 20%, it's $10 or $20. And then you get to actually, jump into a real trade and jump out of a real trade. You learn how to, do all the stuff you need to do to actually purchase something. I always tell everyone, after you start getting the handle of this, then every now and then you might do a little fractional trade with a small amount of money. Now, again, we're not a stock calling service. We're darn sure not a bit calling service. We're an education firm. Part of your education, though, can be a little fractional trading with a small dollar amount. Again, it teaches you how to enter, teaches you how to put in a good till canceled sell order at a certain price to sell half of your few shares when you hit that one time, the two-day ATR, and set up using your little widget over here for your long and short positions. All the things that you see us doing as we enter trades and exit trades to make it work. That is where we are, folks, as we wrap up the day on Friday. We so appreciate you being with us. We always love to hear from you. CW@chartingwealth.com. Do check out those 2 videos at the end of today's video, where we give you our market review, our market forecast for the next week. And again, we appreciate you and hope you appreciate what we do here for free. If you do, you can always become a Patreon member. And what is the first thing you get? Options Made Simple, the Charting Wealth Way. We think it's the best options training out there, and you get it for free as the first bonus of many as a Patreon member at any of the 3 levels. If you're interested, follow the link in the show notes and check it out. God bless.